Okay, so what if I told you that almost every single piece of investment advice you've ever heard is focused on, well, the wrong thing? Today, we are going to dig into the one single biggest mistake that keeps 99% of investors from really succeeding. And here's the spoiler: it has absolutely nothing to do with what stock you buy, it's all about when you sell. Yeah, 99%. Let that number sink in for a second. According to market veterans who've been watching this game for decades, that's the percentage of regular investors who fail to make money through any kind of actual skill. It's a huge, staggering figure that basically suggests most success stories you hear are just pure dumb luck. So, fail at what exactly? Right? Well, they fail at consistently winning in the stock market. Instead of using a real strategy, their returns, if they even have any, often come down to just getting lucky. Like inheriting some stocks or completely forgetting they owned something that just happened to go on a crazy run. The root of this whole 99% problem is actually surprisingly simple. After watching investors for over 30 years, our source pinpointed one core issue. We have this overwhelming obsession with entering the market, with finding the next hot stock to buy, and we give almost zero thought to the exit. I bet some of these habits look familiar. We get scared when a stock is doing well, so we sell our winners way too early. But then we get weirdly confident in our losers. We average down, telling ourselves it's a bargain now. We get emotionally attached, just praying to get back to even. And all the while, our money is just sitting there, completely stuck, missing out on real opportunities. And this, right here, this is the huge disconnect. Just turn on the TV, open any financial news website, the entire industry is screaming at you about what you should buy. But almost no one is talking about the question that actually determines whether you make money or not. What and when should you sell? Which brings us right to the heart of it all: the massive difference between just being in the market and actually getting real, measurable performance out of it. This is the sentence I want you to remember. Buying a stock, that just gets you a ticket to the game. You're participating. Congrats. But your exit, that moment you click the sell button, that's what locks in your profit or your loss. That is what decides your performance. Just think about this for a second. You could be sitting on a massive 300% gain on paper. You're feeling like a genius, right? But if you don't have a plan to sell and that stock tumbles all the way back down to what you paid for it, your performance is zero. A big fat nothing. That profit just vanished. Poof, gone. Look, having no plan doesn't just feel bad, it has very real, very tangible costs. Let's break down what actually happens when your money is stuck in a losing stock without an exit strategy. The first cost is something called opportunity cost. And this is a big one. It's not just about the money you might lose on a bad stock. It's about the incredible gains you're not making because your capital is trapped in that loser, unable to be put to work in the next big winner that's right around the corner. Let's make this real. Look at the story of this stock, Tanla. For years, it did absolutely nothing. It just frustrated anyone who owned it. Then, in 2020, it finally started to break out a little bit. And what did all those frustrated long-term holders do? They sold. They were just happy to get out and break even. Their exit plan was based on pure emotion. And what happened right after they sold? The stock exploded, over 800%. They missed a life-changing gain because they got out at the exact wrong moment. This story shows us something absolutely crucial. An exit strategy isn't just about cutting your losses. It's also about knowing when to stay in, to ride those short, powerful rocket ship trends that can make your entire portfolio. The Tunla investors exited based on frustration, and it cost them dearly. Okay, so we've seen how painful having no plan can be. The solution isn't about trying to predict the future. It's much simpler. It's about having a disciplined, structured approach for every single investment you make. This is the mindset you need. Seriously, successful investing requires a plan that you can execute with the discipline of a soldier. You have to remove the emotion, all the fear, the greed, the hope, and just follow your rules in a cold-blooded way. So what does a plan like this even look like? Well, here's a simple but incredibly powerful 4-step framework. Before you even think about investing, you have to have a crystal clear answer for each of these questions. What am I buying? When am I buying it? How much am I buying? And most importantly, when am I selling it? And here is the absolute non-negotiable golden rule. You have to know the answers to all 4 of those questions before you ever click the buy button. Because trying to figure out your exit strategy when your stock is already down 50%, it's way too late. Your brain is hijacked by fear and you're not going to make a good decision. Now, I know what you might be thinking. Doesn't this mean I'm going to be taking a lot of small losses? And you'd be right. But now let's look at the data, because it shows precisely why that's the secret to winning big. Take a look at this. It's a sample portfolio of over 400 trades. And it was highly profitable. But notice something weird? 58% of the trades were losers. They were wrong more than half the time. Which leads us to the million-dollar question, right? How on earth can you make serious money if you're wrong more often than you're right? It feels like it shouldn't work. The answer is the beautiful, magical power of asymmetric returns. It's simple, really. A disciplined exit strategy keeps every single loss small and controlled. You cut them off before they can do real damage. But when you win, your strategy lets you win big. Just a few of these massive winners completely wipe out dozens of those small, manageable losses. It's the classic 80-20 rule, but for investing. Your success doesn't come from being right all the time. It comes from squeezing every last drop of profit out of that small handful of outlier stocks that produce almost all of your portfolio's gains. So let's wrap this up with the key takeaways. First, not having a plan to exit your winners turns potential profit into lifelong regret. Second, you don't really lose money by buying the wrong stock. You lose money by staying in it way too long. And finally, yeah, selling a winner a little early might cost you some upside, but failing to sell a loser on time, that is a catastrophic risk to your entire financial future. So let's bring it back to that one idea, the one that should be stuck in your head by now. Getting into the market is easy. Anyone can do it. That's just participation. But achieving real performance, the kind that actually builds wealth, that is decided entirely by your exit. Which leaves just one final and very important question for you to answer. For every single thing you own in your portfolio right now, what is your exit strategy?